This is Alan Bush with the Daily Financial Forecast for Thursday, November 3rd. Starting out with the stock index futures, first of all, we had the Fed yesterday leaving credit policies unchanged as was widely anticipated. Stock indices a little bit better right now. We did have a series of economic reports this morning, for the most part coming in mixed. We do feel that once the elections are out of the way, that the bull market will resume. But between now and November 8th, there seems to be a lot of liquidation and a lot of evening up ahead of the elections. But once that is out of the way, after the elections are over, look for a new leg up in stock index futures. Now moving over to the currencies, seeing the dollar index under a little pressure. Some of this linked to probabilities that the Fed will raise rates at the December meeting have declined a little bit. So that seems to be undermining the greenback to some degree and supporting some of the other currencies. However, the pound sharply higher. This after the Bank of England at their policy meeting today left interest rate policies unchanged. Their quantitative easing program also left unchanged. But what was supportive was the comments from the Bank of England indicating that they most likely will not be lowering interest rates anytime this year. So that supported the pound. Also, we had some political news as far as the Brexit, also supporting the British pound. So good gains there. I would expect that strength in the pound will probably not follow through very much. However, we do continue to like the long side of the Australian dollar, which is a little bit higher again today, even though we do have crude oil slightly lower. Also, we're seeing the Australian dollar gaining a bit on the Canadian dollar. So nothing changing in our long-term view there. Looking for the Aussie dollar to continue to advance against the US dollar and also against the Canadian dollar. I would be outright long Australian and outright long Australian against the Canadian dollar. Now moving over to the interest rate futures markets, we are seeing the bonds lower for no apparent reason. As we mentioned earlier, the economic reports were basically mixed. Prospects of a rate increase at the December meeting diminishing a bit now to 67%. Yesterday, they were at 74%. So the bonds lower, which appears to be overreacting on the downside to the news that we do have, that in itself should be viewed as a sign of weakness. So look for more of the same, more pressure likely in the bonds. And this is a trend that will probably last through the balance of this year and probably well into next year. So looking for lower prices for bond futures. So good trading, everyone. Once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.